Hello everyone, welcome back to Financial News in Palos Heights. I am Ron Jankowski with Channel 4 in Palos Heights, and of course my co-host always is Paul Munico from Ameriprise. Paul, how did you do this weekend?
Thanks, Ron. It was a busy Halloween weekend.
And the temperature really dropped, didn't it?
It's cold. I've got too much sugar in my system, but it was good. It was great.
Yeah, it was great. And my grandkids all brought lots of sugar. And of course, I had to be
You
part
can't
of
say
that.
no. You got to
can't
try
say
them all.
no.
Yeah.
You got to do it. You got to do it. Okay, Paul is going to give us an update as what took place last week in the marketplace, and I will be giving you the last minute news that we have gotten from Ameriprise as to what's taking place today. So, Paul, I'll let you take it away.
Thanks, Ron. Today I'm going to give you a Q3 earnings update to build on for those investing at home. So we do continue to see outperformance, but forward estimates are growing a bit more cautious. Through last Friday's, we had about 281, or about 56% of the S&P 500's current, believe it or not, 505 constituents had reported their financial results for the third quarter. Now, S&P 500 companies are now seen as generating year-over-year earnings per share growth for the period of 36.5% on sales growth of 15.9%. Aggregate earnings per share for Q3 are now forecast at $52.59. That's up $1.61 from last week's estimate of $50.98, which itself was up $1.08 from the prior week. So you see the pattern forming here. The current blended estimate, that's actuals plus estimates for the quarter now, is plus $3.89 higher than where estimates stood at the end of the quarter ending September 27th. And believe it or not, $5.14 higher relative to where estimates started the third quarter going back to 6/30. Over the last week, however, forward estimates have grown more cautious. Full year earnings per share estimates for 2022 now look for aggregate earnings per share of $220.97. That's down about 26 cents from last week's. Now, estimates going out to 2023, however, now look for earnings per share of $239.73 versus the $239.12 estimated at this time last week. And just so you know, all this data that we mentioned in today's commentary, we did source it from FactSet. So a lot of numbers there on earnings, but if you're invested in the markets, it's something you should be aware of, and that's why I wanted to report it.
Right, and you really need to talk to someone who is really on top of what is taking place by minute. That's a financial advisor. And I want to mention also today being November 1st, 2021, the news that we got from Ameriprise this morning is the U.S. futures are pointing to a stronger open. Any comment, Paul?
No, it's nice to see. I mean, the market is, I know you're going to report the numbers, but we're still posting very strong numbers. Yeah. And it's great to start out a new week with the earnings or the futures pointing upward.
And the Fed's monetary decision in focus again this week, and of course they had a meeting last week, did they not?
Yeah, they're going to talk this week. It's kind of expected that they may slow their bond purchasing, but that's just speculation. We got to wait and see. And the market, I know, is anticipating what's going to happen there.
And Europe, Asia equities mostly higher overnight, and the 10-year Treasury yield is at a plus 1.59%.
Yep, it's nice to see overseas. We always say it's kind of a global economy,
yeah.
So we all kind of go up together, hopefully.
And the bad news is West Texas Intermediate, WTI crude oil trading at $84 and hasn't dropped, and so the gasoline prices are probably going to either stay the same or maybe creep up.
I think we got a bit of a drop last week. I'd have to double check the data. I think last week we did drop, but as you're reporting, we're kind of bouncing right back up.
Yeah, we are. And I want to give the year-to-date numbers, percentages for the S&P 500 is a plus 24%. The Dow is a plus 18%, and the NASDAQ is a plus 20%. Solid.
solid and really staggering. Like, I hope people appreciate like how good this market is
Yeah.
this year and last year, because it's not common to be up, this high.
Most everyone that's in this marketplace has made money on some stock somewhere. I'm sure there are some negatives, but mostly positives.
Hopefully, everything isn't all roses, when you're
No.
investing in the stock market.
No.
So, again, that's why working with someone or doing a lot of research before you invest is very important.
Well, thank you, Paul. Stay with us. We'll be right back. Paul has a topic that he's going to share with us, and we'll be right back with our show called Your Money. And we're back with Your Money. Thank you for staying with us. And Paul is going to be talking about spending or investing. Paul, I'll let you take it away today.
Good topic. Yeah. So, there's some new thoughts on an age-old dilemma. A familiar experience for many Americans is that as fast as money comes in, usually goes out the door again in pursuit of the next either must-have purchase. So such spending habits can take a toll on plans to build up savings for the future. The key is finding that balance between immediate gratification and long-term financial security. People are juggling daily expenses, household bills, and rising costs of consumer goods. But the bigger challenge often comes when it is a time to make a major purchase, like a home or a car, new appliances, or some home improvements. When it comes to major purchases, when is the expenditure worth it, and when is the cost too prohibitive relative to your financial future? So juggling the real cost, there are a variety of ways to assess your financial value of these major purchases. The approach you choose can vary depending on the type of expenditure you make. So here I'm going to give you 3 ways to think about it. Number 1, opportunity cost. Whenever you're making a significant purchase on a product or service, you need to look at how it will impact your financial future. It is important to assess the opportunity cost of making a cash purchase today. So for example, consider what could happen if instead of spending $5,000 on an extravagant vacation, that money was invested for 20 years, earning, say, 7% per year. Over that period of time, that $5,000 could grow to more than $19,000, and that's not accounting for taxes or investment fees. Assessing potential opportunity cost is one way to better evaluate the real cost of making a significant purchase. Point number 2 is a return on your investment. So another consideration is whether there is a payback on the purchase. So for example, paying for a class or a college degree may provide a future return in the form of the potential for increased income. Anybody who has spent or taken loans, say $100,000 or more for a medical or law degree, likely does so with a reasonable expectation that future income will more than make up the difference. A home improvement may be looked at in the same way, an investment that may be recouped in the future. The third and final point I want to make is about borrowing the money to cover purchase costs. Now, while it may be tempting to pay for purchases with credit cards, home equity loans, or other types of financing, you have to think about how much borrowing the money will cost in the long run. The key here is to limit interest charges as much as possible. It's not that you necessarily need to avoid all debt. In some instances, you can incur what we call good debt, which is used to purchase an asset that has a long lifespan, increasing value and other potential benefits such as tax deductibility of interest. Mortgages and student loans are typically considered good debt. Major expenditures, remember, they aren't just about the immediate benefit. You should consider whether the current cost will become more significant over time because the money was not invested in your own future.
And then some of this investment on or spending money might be a one-time charge to upgrade something or purchase a product that you could save money by buying it all at one time and spending all the money at one time rather than spreading it out or whatever. Or the cost of that product could increase. So, like you say, you have to weigh it.
It's hard, and I certainly don't have the answers. It's kind of like what you're alluding to. Like, say you've got an old car. Does it make sense to keep repairing it, or are you better off just selling it, biting the bullet, and buying a new one? I mean, they're not easy decisions, but they're things you got to work through.
Yeah, I went through that a year ago, and I ended up being forced into buying another car. But it's basically how much money do you want to spend on upgrading your car, and is it going to last longer than? It will last longer, but is it going to offset other costs if you were to purchase a brand new vehicle?
Right. And think about what you did. Like, you were kind of lucky if you bought it a year ago, because people looking for new cars now, they're having a difficult time with inventory so low.
Inventory is so low.
So the prices went way up.
Yes.
You know, and if you didn't, you couldn't have known that, but
No.
you did well to get
Yeah,
it before
I did.
that happened.
I did. Yeah. Good topic, Paul. Thank you. If there are any questions anyone has, they can call you.
Absolutely. You can call me directly, 708-226-3412.
Okay, well, thank you, Paul, for Paul Munichel with Ameriprise Financial and myself, Ron Jankowski with Channel 4. We wish you good investment day.